Okay, let's go on.
All right. So
Top
let's
5 things.
do the top 5 things to watch next week. So
Right.
starting with number 6.
Number 6, I like it.
Number 7 is how much weight you're going to gain over the Thanksgiving weekend. Are you over under 2 pounds? What's your over
So I
under?
don't think we've mentioned this yet. It's the Canadian Thanksgiving for our American friends, and yeah, no, it's going to be ugly, Patrick. There's no doubt about it. It is going to be probably more than 2 pounds. 2 pounds is like a few beers. Like, think about it. It's going to be 5 if you probably really did it properly. Don't you think?
Oh yeah. Once you get into that pumpkin cheesecake and stuff like that, it gets
Pumpkin
ugly. Right?
cheesecake. What the hell?
Oh, you've never had? Oh, dude,
No,
you're
but,
missing
like,
out.
Is that what you guys have? Like the pumpkin cheese?
Oh yeah,
How's that-
my daughter makes like the most wicked pumpkin cheesecake. Like I can freaking eat the whole thing. It's so good.
You know what?
So good.
Cheesecake is one of those things that when you look at it, how many calories it is completely not worth it. Like there's some things that are value when you like measure them, like and cheesecake is one of them. It's like croissant as well. Like what the hell? Like, I probably said that wrong. All the Americans will get mad at me because they sound how they say it, and they say we sound French and trying to sound. How do they say it?
Croissant.
Instead of croissant. That's it. I got a good croissant. Anyways, because if I say croissant, they say, "Oh, you're sounding so fancy." But anyways, it's another one that they just
Fancy Kev. There we go.
Fancy Kev. It is so not worth it on a calorie basis, and what? Not only that, let's face it, it doesn't fill you up. You could eat 6 of them and still be hungry. It's
And
a
they're so
terrible. It's a
fattening.
terrible food. Anyways, let's talk bank earnings.
All right, so now, we had 6 things we wanted to talk about, so we made a few, and we made it just 7 right now. But anyway, number 6, bank earnings, and what I wanted to do is I'll just pull up the XLF. But obviously, there's a big wave of the bank earnings, Bank of America, and all of them are coming out, and there's sort of that's been other than the big reaction off of the December low, which saw these financials recover pretty strongly into March. Since then, the financials have just been in a muddle, right? And it's going to be really interesting to see what comes of this earnings cycle here and whether this is going to be a tailwind and is going to push these back to their highs or not. Because J.P. Morgan for a little bit was breaking out to an all-time new high and gave it all back, right? And so what's your thinking?
It's definitely porpoising. Like there's no doubt about it. Like just up, down, up, down, up, down, like a porpoise through the water. I still love the U.S.
Porpoising.
banks. I love them. I really do.
Yeah.
I think that even though
So,
I'm
but
negative
do
on
you
the
think
market,
but is this quarter earnings going to reflect your love?
well, sometimes it doesn't even matter what they do on the earnings, and it's one of those times that maybe they'll look forward that even with bad earnings, it won't matter. That they'll look forward in a rally.
Right.
And so I'm not as convinced. Let's put it this way. I don't think this quarter is going to be anything that's going to cause them to go down. That is something I believe, and I contend that you're going to find them just continue to chug higher and continue to make more money. And no, I'm not worried about this quarter earnings. And in fact, I think that the surprise, if I had to pick something, the surprise will be that they outperform and that they do better on the earnings than we expect.
Right. All right. So number 5, Apple. I just wanted to do I can't believe this thing's breaking to all-time new highs. What a run this thing's had.
I think it's the cherry coke loving octogenarian that's buying it all.
You think so, eh? He's juicing
He's juicing the apple. I like that. Juicing the
We have apple cider that we're drinking. Yeah. We're juicing our own apple.
Yeah, I don't know, Patrick. This thing perplexes me. I get it. It's GARP, growth at a reasonable price. But having said that, it's still a big bloody company, and growth gets tougher as you get bigger, and it's mature, and it just kind of feels to me that it's, I don't know, it almost feels like people are hiding in it. I don't know. I don't really understand why it's doing so well.
Just right now, make the call. Prairie dog or no prairie dog on this Apple breakout?
Well, you know me. I love the prairie dog technical.
A noble
formation.
animal.
It's a noble animal. You have to go with it.
So you're fading this.
So, Patrick, I will be honest with you. I have a problem in that I see way too many prairie dogs. Like, dude, it's like
that's the Winnipegger in you, right? Like it's just like I said.
See, I'm like the kid,
I
that
see
kid
prairie
in,
dogs everywhere.
You know the kid in Sixth Sense that he
Yeah.
does. He sees dead people everywhere. I see prairie dogs everywhere.
Yeah.
And ultimately, it might or might not. When they work, they feel great, but when they don't work, you get run over as it explodes higher. Now, Lena's telling me, she's texting me while she's listening to this, telling me that the iPhone 11 is causing the rally. But like, really, is the iPhone 11 some terrific product that's like really mind blowing? I don't buy it. Like I just don't think that's.
You know, if I was my intuition here, whether it prairie dogs or not, I think this is a very poor asymmetric moment to start buying. So like, I mean, look, maybe it has another $5-10 on the upside, but this is to me, there's more room for it to give back a bigger loss than the gain that you have from being long it here. I think it's just a poor time to be continuing to press the stock.
So listen, folks, Patrick and I are both negative on the Apple. You should buy it with both
go
fists.
buy it
It's going to $300. There you go.
Yeah, yep, there you go.
And Lena's probably going to buy it. She's going to be like, those idiots don't know the iPhone 11's awesome. Okay, number 4. Let's talk some US JPY now.
Yeah, so
put it up properly.
That's why I typed in USD JPY because you don't like it when I show it like it's properly supposed to be. And let's look at it like the forex traders do. Okay. But we have the US dollar yen, and it's not. The US dollar is actually working well, even though against the pound and the euro it's not, and so it's moving a little bit counter trend. Will it break out? That's a question I'm asking. Nobody is really paying attention to yen. Everyone, to them, this is like a nothing burger. What's your call? Do you think this is
the reason it's such a nothing burger is I believe that the yen is in the tightest range that it's ever been in terms of like when you look on a yearly basis over the last like 40 years. Like volatility on the currencies has gone way, way, way down.
Oh yeah.
And
I mean, that's one of your big calls, isn't it? That currency volatility.
So far, it's wrong. Like it's not the volatility.
Well, I mean, when you're talking about a 3-year consolidation, it's not going to break out week after week. Like you have, it's a bigger.
But but I could see bigger moves. It doesn't even have to break out. I could just see moves. I'm wrong. Like volatility in FX is not picking up yet. And so far I'm wrong, but I'm
going to draw a little pretty triangle on this chart here. But like you can see this wedge, it's just tight range from 2015 peak here all the way to present. It's just been a sideways market. Some big move's going to happen at some point. Do you think it starts here though?
So I think you believe it's going to move in that the yen is going to continue to weaken and it will go down, meaning up on this chart to like 112.5 or something, right?
I think that's a very easy level to test, and that wouldn't even be a breakout on that bigger chart we were just looking at. That's just going to the top end of the range.
If you made me buy or sell it, I would definitely sell it, meaning I would buy yen. I'm on the other side of your trade.
Sold to you, buddy.
Yeah, I know.
All right, we got do we have a bet here? Are you willing to wear tight shorts for this bet?
Oh, that's a big one. That's a big one. Okay, let's do it. I'll take it.
You'll take it.
Yeah.
All right. So what's the bet here?
So 112 is how many handles? It's like, what are we trading? 108.40. So that's like 60 cents. 360 higher. So oh god, that's so far down though. Oh god, 360 higher. Let me just figure it out what it is.
But it's back down to the
104.80. I'm in.
Like right.
I'm in. So 104.80 before 112.
Yeah.
Okay, let's write her down.
All right, I'm going to put it in the thing.
104.80 before 112. And somebody is wearing the Market Huddle menswear outfit to the next Huddle meetup. Are we agreed?
What if it's the middle of winter? Then
doesn't matter. I'm from Winnipeg. It's not going to bother me, so I'm good. And you can suck it up. There we go. We got ourselves.
All right, done,
folks.
Done. I'm in.
Okay.
I'm in.
Lord help me. I don't feel as good about this one as my usual bets, but you know what? It's probably because the stakes are so high. Number 3, retail sales.
Number 3, yeah, retail sales are coming out. Are you going to stay with your theme that everything is shit? It's going to be weak?
Yes. I do not think the bounce is coming in the U.S. economy yet. I continue to believe that it will underperform. I don't buy this cleanest dirty shirt in the laundry or whatever it is that they all say.
Okay, I think the forecast is that it comes in at 0.3. Are you thinking that this thing like goes zero, or it's just going to go?
No, it's
tick
just
down?
going to be like 0.2 or 0.1 or something. Like it, I don't. It might be 0.0. It might be zero, but I just at the margin, I continue to believe that the
Think
U.S.
that's
economy is underperform.
weaker.
But listen, don't mistake that. That doesn't mean I'm bullish bonds. I
All
think
right.
we're going to get a situation where U.S. economy is weaker, bonds go down still.
You heard it here first.
Yeah. Number 2.
I'm not going to disagree with that. Anyway, so let's talk Euro Stock 50. And I just thought it was interesting because we always talk the S&P 500, but the Euro Stock is in a really interesting scenario. Let me just find it on my chart here. And hold on, where do I have it here? Anyway, but we're trading right up along its previous high. And I just wanted to ask a simple question. Oh, what happened here? There we go. I wanted to ask the simple question: do we break out to an all-time new high in Europe?
No, that's not all-time new high.
Oh, not all-time. My God, my apologies.
Yeah,
No,
we're
for
so
the year high.
mild, like-
Year high. Year
Okay,
high.
there we go. Yeah. Yeah, I'm going to say we do. And I'll tell you why. I was out for lunch with Aiden Garib from Pavilion Global Macro. You know, we've had him on the show a couple times. And I was giving him my argument, my typical fiscal's coming in Europe. It's going to cause everything stocks to explode higher, the euro to explode higher, and bunds to go down. And he said to me, I said, but I'm still waiting for it. And he says, actually, it's already happening in Europe. And he showed me this graph that I thought was very interesting. It was the fiscal change and like basically the stance of fiscal policy in Europe of the various countries. And I was shocked to see that they've actually already started spending, even though it's not in the news. And I think that's going to continue. And I think that we've kind of reached the point of extreme monetary madness. It's finally been seen for what it is, which is stupidity. And that Europe is going to surprise everyone with some more fiscal, and it's going to cause the stock market to outperform.
So would you do the short S&P, long Euro stock trade here as a pairing?
Yes.
Without a doubt. So are you prepared to be stopped out like Soros in '87?
Yeah, when he did the Japan S&P. That's me. Yeah, that's funny.
But you know what? This actually looks like a pretty bullish chart. So I actually don't want to take the other side of this trade from you. I think that there's a good chance that this might break out. Maybe being bullish Euro stock is going to be really interesting.
Yeah. So can I tell a little story? Do we have time, Patrick?
Please.
Okay. So it involves you. So Patrick phones me up because he's had what is his name? Harvey. What's Harvey's
Harley
last name?
Bassman?
Harley Bassman from the founder of the Move Index. Very smart, wonderful guy, and he's been on his other podcast.
Convexity maven,
that's right.
Harley Bassman.
And you know what? Sign up for it. You can get it for free. Just
sign
up for it.
He's so smart.
Yeah. And so Patrick phones me up all excited because Harvey's come up with this great trade, and he's just all excited. And by the way, it's when Patrick's cheating on me with another podcast is when they interviewed him. But anyways, he phones me up and he says, "How do I do this? How do I do this?" And I kind of laugh and I go, "I haven't listened to it yet." And Patrick sent me the tape and I listened to it and I say, "Boy, that Harvey's really smart." But the thing is, I've kind of argued that 2-3 years ago, and the fact is that trade has been nothing but a world of pain for me. And what it is this. Harvey's looking at the long dated for.
It's not Harvey, but
is it? What is it?
Harley.
Oh, is it Harley? Oh, I didn't realize that. Sorry, Harley. I honestly
watch me. You have it wrong. No.
Yeah, my grandfather's name was Harvey. That's why I went with it. And not only that, we have the great burger joint, so I just kind of figured that's got to be Harvey. Anyway, so Harley had this trade where he recognized that the long dated forwards of both in Europe and Japan, but mostly Europe because of the negative rates, we're trading at discounts. Usually, when you go look at a future, if the interest rates are high, or positive, then what will happen is as you go out on the futures curve, you will see that the subsequent contracts traded higher and higher levels. So let's just do this together here. I'll pull up the E-minis, and I'll tell you what the levels are, just so you can understand and you can kind of see it. So we closed today. The spot was 29.70. The December contract's trading right over spot at 29.71, basically. The March are 29.72, and the June's, they're basically 21.71 and a half. And the reason is because the dividend yield is equal to the interest rate. So there's almost no carry on that. Now, if we go look at the SX5E, let me just pull this contract up, which is the Euro stocks.
Right.
You'll see that the spot traded at 35.69.
Right.
The December's 35.56, 35.40 for March, 34.57 for June, all the way down. If you look at the September 21 contract, even though the spot is trading at 35.70, the September 21 contract is trading at 33.28.
Wow.
Which is what, $300 bucks discount, and that has to do with the fact that negative interest rates. So when I looked at this trade about getting long options, call options on the SX5E, which is the Euro stocks, I looked at the fact that you had this situation where the curve makes it so these things are really, really cheap.
Yeah,
but not only that, you actually have a lot of what's called row risk, which is the risk of interest rates. If you go buy that call option and then nothing changes but interest rates go back up, your call option will actually appreciate. The long story short is that I've loved this trade for 3 years. I actually wrote it up 3 years ago, and it's been nothing but pain. So, Harley, I hope it works for you. I hope your timing's better than mine because mine sucks. But I hear you. I love the trade. It's one of my favorite ideas, but it's just that it's difficult to time.
You know what? See, this is the problem. Once again, you're incredibly smart, but just early. You're just early all the time.
So I met this really smart fellow that manages money, and he said that when he has a good idea, he sets them. Have you ever seen those services where you can email yourself something, and it like I use it. It's called Follow Up Then. And usually what I'll do is I'll put it for a month or a week or even a day later so that it comes back to me. He emails it to himself 2 years later. So he's like, oh, look into buying Euro stocks because I like it here. And then he'll put it literally 2 years from now.
So then he'll put on the trade 2 years later.
Yeah. So I need to take some advice from him. Okay, number one.
That's hilarious.
What is the number one?
Oh, so number one, the China trade deal, right? We have to talk about this. And so look, so the headline here was that some sort of a deal will be reached, and the tariffs will be delayed. And it's interesting that it was at least you already said it once, and I'll give you kudos for it. But what we're seeing here is it's kind of buy rumor, sell news. Like the moment that headline came out, the S&P dropped 20 points off its high.
Yeah, there's just no way that they're going to be able to outperform expectations. There's just it's a classic buy the rumor, sell the news, and there's just nothing else to talk about. It's sold to you. That's how I feel about it. I might be wrong. Watch it rip 40 or 50 or maybe even $100 in my face. That could very well be, but I just don't buy it. I don't think that anything fundamentally has changed. And meanwhile, we're kind of remember it was 2 days ago we had the bad news and the S&P was down $35 overnight. Pull up the chart. What was that price, Patrick?
On the S&P?
Yeah, the future,
I got it up here. So you want an hourly chart?
Yeah, what was it
down here 2850. Which
no,
low are you talking?
It was literally that one there. That was the
this
night,
one here.
Right?
It was 2883.
So how many? What were
100 points higher.
Yeah. So I don't know. Do you think is it worth? I don't know.
All I know is I'll be ready to go short when you're being stopped out. So just tell me when you're covering.
That's right.
In
You know what?
pain,
I
and
don't
I'll
even
I'll help you
you
cover
just journal
your
the position. Just journal the position into
position
your
over to
inventory.
me, and I'll go short when you're chickening out.
Actually, you know what? Here, I'll tell you a great theory, a trade that I had that Patrick, that I think is a great idea. You know how that when they look at futures accounts or even option accounts, that 90% of retail investors lose.
Okay.
So, I think we should start a fund, like a brokerage firm, that just takes the other side of everybody's trades.
That's what half the CFD brokers out
No,
there
no,
do.
no. Oh yeah, I guess you're right. They do, but don't even hedge them. Seriously,
That's what half the CFD trading firms do. This is not rocket science.
do you
right?
honestly think they do that?
And some of the more well-established ones do auto hedging, but the smaller little shady ones, they don't even bother hedging for sure.
You think
They
honestly?
just wait. They wait for their clients to zero.
So does that mean that if you're a smart and start picking them off, they'll cut you off, like kind of like when you go to Vegas and count cards?
It's a good question. I mean, I'm sure one of our listeners will pine in on this and send us an email. But
Because there's got to be opportunities there. Then, if that is the case, if they are not truly hedging it and they are doing that, then you could probably pick them off.
yeah, you could. You could find some way of doing it for sure.
Anyways, number one, China trade deal. Buy the rumor, sell the news. I think it's just going to be just classic. What do you think?
And I'm not
Patrick?
sold on your little theory. I think that we can still pop higher into next week, but let's see. Right now, I'm not so convinced that it's a short-term top.
Okay, well there you go.
You're more bearish than I am.
The world is back all screwed up. It's like
Just
basically-
please go bullish at some point, Kev, so I can go bearish again.
Yeah. Well, we're not there. Anyways. Okay, let's go on.
All right.